Okay, what are the ideas that we draw from our inventory? The first one being, I observe that most daily bars or candles break the high and or the low of the previous day's trading range. Okay, a very simple observation, very simple. Okay, the second one, I observe the biggest volatility and price movement occurring during the European and first half of the American session. Okay, also something that is almost obvious, you should say. Okay, I mean, is it worth to put on a list something as basic as this, that most daily bars break the high and or the low of the previous day's trading range? This is something that everyone knows, that everyone sees. Yes, everyone knows that where the biggest volatility is. But how many people make the effort to capitalize on that? How many people make the effort to measure the potential of that and choose carefully which tools are the most appropriate ones to capitalize on that? Okay, and we could go on, and the number of people will reduce. How many people will be able to formulate rules on those tools, with those indicators, with those combination of indicators? How many people would take the time to test it? Okay, and how many people would take the time to verify once line in real time, verify and fine tune, and so on and so on. So we see that the key here, that the point is not of being original or finding something that nobody knows, but the way to process an information that everyone knows, but only few are making something about it. Okay. So here we see a chart where we see those potential breakouts. Okay, I've zoomed these the price action you see here in this ellipse form. I zoomed it a little bit, and you see the obvious, that most candles break above and below the previous day's candle. Okay. Most of the time it happens. Not always. For example, we have this candle here, which doesn't break. By the way, do you know what is the technical term for a candle that doesn't break the previous day's candle, the previous period candle? You know the technical name? Inside bar, correct. The Western technical term. Okay, it's important to inside day. You are on a daily chart. It's important to get familiar with the right technical terms. It allows communication, and it allows us to be rigorous about what we do. Okay. You know that. I mean, if you go on some academic circles, technical analysis sometimes it's still seen as a bit of hocus pocus, and but fact is that technical analysis exists for at least 300 years. We know from the first intent of forecasting price movements. Okay, and a lot of people have worked in different areas. There are a lot of different branches in technical analysis, and it's a very serious study, and it deserves some attention. It deserves rigor, and that is why I find it interesting to have always the proper definitions for things. So here we see that the breakout is something that we see most of the time. In fact, we see if you go through this daily chart on the Sterling, you see that most of the candles break the previous candle high or low or both. Okay, but how many times? How many times is there a breakout, and of which magnitude? This is something that we will measure. Okay. And the second idea concerning the sessions, the market session, we see on this chart here that most of the action really happens during European and first half of the American session. Okay, this is an idealized chart. Obviously, when we do webinars, we usually choose idealized charts and situations to show the concept or the idea. Well, I will try not to do it when we are coming closer to trading. But for this proposed here, I choose the chart where we clearly see that the moves are restricted to some part of the day. So that is the part of the day we want to capitalize on. Just to answer to Alper who asked, so for this example, you also choose the time frame as 1 day. That we will see. We will see that. I can tell you in advance that the strategy is an intraday one. It's an intraday strategy working on a 60 minutes. But there was a reason for choosing a lower time in the daily. Okay, the initial observation comes from the daily chart. That's correct. But the chosen time frame to work is a minor one, a smaller one, by a degree of 24. We went down to 60 minutes. Okay, and I will explain. Pardon, I'm just clicking the wrong button. There is a reason. There is a reason for it. Okay,